Welcome back to the cryptoworld channel, everyone. My name is Josh, and right now, Ethereum is still trading within this sideways price range, while Bitcoin is forming a new pattern in the short term that we need to pay attention to. And today, the Federal Reserve makes its decision on interest rates, which I'll talk about in just a moment, so definitely stick around. First of all, just giving you a quick update on the weekly Bitcoin chart, reminding you that the larger bullish trend is obviously still intact, as I've been saying since the very beginning of this year. And obviously, we still have this significant area of resistance on the weekly time frame in between around 36,000 to 38,000. And just taking a quick look at the daily Bitcoin chart, obviously, we can still see this previous significant area of resistance, which should now act as new support in case we see any major pullback. And that area which should act as support is sitting in between around 30.5k to 31.5k. But obviously, in terms of the trend and momentum on the daily time frame in the price of Bitcoin, we are still clearly trending in the bullish direction as of right now. We have not confirmed any bearish reversal signals. But with that being said, if you're looking at the daily Bitcoin MACD, as I've been saying almost every day over the last 1 week, this is telling us we're seeing declining bullish momentum, which means just in the short term, we're basically taking a bit of a pause from all of this previous bullish price action. We're simply slowing down in the short term, but as of right now, we have not yet confirmed any bearish reversal. So once again, we're still looking more bullish than bearish. And as for the daily Bitcoin RSI, obviously right now, this is still very overbought. And like I've been saying for the last 1 week, it is extremely likely that this daily Bitcoin RSI will continue to form lower highs in the coming weeks. And that will likely happen regardless of if the price actually forms higher highs, which means if the price does end up forming higher highs over the next 1 to 2 weeks or so, that would likely form a bearish divergence. So that is just something to pay attention to moving forward over the next few weeks. And if you're looking at the shorter term, looking at the 4-hour time frame, right now the price of Bitcoin is still trading within this choppy sideways price range in between this support and this resistance. First of all, this horizontal line of support is sitting at around 33.6k, and this horizontal line of resistance is sitting at approximately 34.9k. And if we end up seeing a confirmed breakout above that line of resistance, then in that case, this could play out as a bullish flag pattern, which would set up a technical price target at approximately 38.4k. But remember, between now and then, there is that major area of resistance in between around 36k to 38k here on the weekly time frame. And of course, it is also important to understand that as of right now, this larger price target is not yet active at all, because we have not yet seen a confirmed breakout above this resistance. So at least for now, while the price of Bitcoin is trading in between around 33.6k to around 35k, basically in the short term, we're looking relatively neutral in a choppy sideways price range. And believe it or not, you can make a lot of money very easily in a choppy sideways price range just like this. And if you want to know how to do that, then stick around to the end of this video to find out more. But first, taking a look at this Bitcoin chart on the 8-hour time frame, like I said in my last video on the channel, we are potentially forming a bullish pennant, or at the very least a symmetrical triangle pattern. And now if this actually plays out as a full-on bullish pennant pattern, then in that case, check out my last video on the channel to find out more about this potential bull pennant and the technical price target in that case. But if this breaks out or breaks down as just a symmetrical triangle pattern, then first of all, if we break this line of support, which is sitting at around 34.2k, if we break below that level with confirmation, like 8-hour candle closes below that level, then in that case, that would set up a technical price target at around 32.9k. So that would be around a 3 to 4% move to the downside. But on the other hand, if we confirm a breakout above that line of resistance, then we would have this initial price target for the symmetrical triangle pattern sitting at around $36,000 per Bitcoin. And so obviously that is a potential trade we could take, whether we break support or resistance. Obviously, if we break out to the upside, that could be a long position we could take, or if we break to the downside, we could simply short Bitcoin and make profits. And if you want to know where you could long or short Bitcoin, basically profit no matter if the price is breaking out to the upside or to the downside, personally, I usually use Bybit as an exchange to long or short Bitcoin in these type of moves. And I'll make sure to leave a link to Bybit in the description down below and in the pinned comment, where you can also claim a massive deposit bonus. But unfortunately, there are some locations around the world where you cannot access Bybit, And in that case, there is also Bitflex as a backup option, which is just like Bybit, but you can access it from those restricted areas, which I'll also leave a link to Bitflex in the description down below and in the pinned comments. So definitely check that out if you want to trade these moves. And if you're taking a look at the 6-hour Bitcoin chart, we can actually see a potential ascending triangle pattern forming, which is technically a bullish pattern because we have horizontal highs and ascending lows, meaning an increase in buying pressure and not much change in selling pressure. And at the same time as this forming on the 6-hour time frame, we also have a hidden bullish divergence forming on the 6-hour Bitcoin chart. Because as you can see right here, the price in the candle closes on the 6-hour chart, at least as of right now, is forming higher lows, while the RSI on the 6-hour time frame is forming lower lows, which once again is a hidden bullish divergence. And usually a hidden bullish divergence is a bullish continuation pattern. So this usually happens within a bullish trend, which obviously we have seen recently. And so essentially this is pointing towards the continuation of that bullish trend, technically speaking. And so all we really need to see now is a confirmed breakout above this line of resistance, which once again is sitting at the high $34,000 prices, very close to $35,000. And this ascending line of support once again is sitting at around 34.1 to 34.2K. And today we also have an FOMC meeting, also known as a Fed meeting. And by the time you're watching this, it might have already happened because as of right now, it's happening in just a few hours from now. And right now, as of recording this video, just before the FOMC meeting, the Fed funds rate is sitting at 5.5% on the high end, which is 550 basis points. And what's very interesting is if you're taking a look at what the futures market is pricing in right now for the probabilities of this FOMC meeting, unlike my last video, the futures market has actually changed what it is pricing in. Because if you watched my last video here on the channel, you would know that almost everyone in the market was pricing in a very high chance of no change in interest rates, which as of right now is still the case. But if you watched my last video on the channel just yesterday, there were some market participants actually pricing in a possibility for a 25 basis point cut, meaning reducing interest rates by 0.25%. But right now, the market is no longer pricing in at all for any rate cut today, and instead, roughly around 3% of the market is pricing in for a 25 basis point hike, meaning raising interest rates by 0.25%. But once again, at least for now, as of recording this video, this is only around a 3% probability, and almost everyone in the market, once again, is still pricing for no change in interest rates. And so what this means is if we see that outcome, if we see no change in interest rates, basically that's relatively neutral for the market. We shouldn't really see anything major in the market if we see that outcome. But if we see anything other than no change in interest rates, so basically if we see a rate cut or a rate hike, then that is where we could see a lot more volatility in the market. First of all, if we somehow see a 25 basis point cut, that would be very bullish. But if we somehow see a 25 basis point hike, meaning raising interest rates, that would be very bearish. At least in the short term, we would likely see a short-term dump. And now if we end up seeing the neutral outcome, which is no change in interest rates, we could still see a bit of volatility in the market roughly around half an hour to an hour after the Fed's rate decision due to the Fed press conference, Jerome Powell's press conference, roughly half an hour after the decision. And so depending on what Jerome Powell says in that press conference, basically hinting at what the Fed could be doing at future Fed meetings, that could also influence the markets in the short term, which I will be updating about over on my Twitter in real time. So if you want a fast real-time update on this information as soon as these numbers get released, then make sure to follow me over on my Twitter, link down below in the description and in the pinned comment. And if you want to know about future Fed meetings, what we could expect for rate hikes or rate cuts at future Fed meetings beyond today, then check out my last video here on the channel because these future probabilities since yesterday haven't really changed all that much. But anyway, now getting into the Ethereum part of this video, this is on the 3-day ETH to US dollar chart, and right now the breakout for this falling wedge pattern is technically still active. And so once again, this still means we have an active price target at around 2.1k, and this price target and this pattern only invalidate if we see a confirmed break back below around 1.7k. And so if you're zooming into the daily time frame, obviously we still have this important area of resistance the price has been running into, sitting in between around 1850 to 1890 approximately, based on the volume profile indicator. And in a more bullish scenario, if we eventually break out above around 1890, ideally back above 1.9k, then in that case we also have this area of resistance at around $2,000 to $20,000. 2030. And as for the trend and momentum on the daily time frame, of course, as of right now, and as we've seen over recent weeks, we are still looking more bullish than bearish. We have not confirmed any bearish reversal signals. But with that being said, if you're looking at the daily Ethereum MACD, once again, like I've said over the last 1 week or so, this is showing a reduction in bullish momentum, meaning just in the short term, we're basically slowing down from all of this previous bullish price action. And like I've been saying almost every day over the last 1 week for Bitcoin, once again, it's likely we could also form a potential bearish divergence here on the daily time frame for the price of ETH. But at least as of right now, a potential bearish divergence is not yet confirmed. And in fact, this previous bullish divergence is still currently confirmed here on the daily time frame, because as of right now, we have not yet invalidated this higher low structure here in the daily Ethereum RSI. And just staying on the daily time frame, of course, we still have an active broadening wedge pattern with a breakout to the upside and a technical price target at around 1980. And this pattern is still active. This price target is still active because we have not yet seen a confirmed break back below around 1730, which would be the point of invalidation. And if you're zooming into the shorter term, looking at the 4-hour ETH to US dollar chart, obviously as of right now, just in the short term, and like I've been saying almost every day over the last 1 week, the price is basically in a choppy sideways price range in between this support and this resistance. First of all, this line of support is sitting at approximately 1760, and this line of resistance is sitting at approximately 1850. And so at least while the price of ETH is still trading in between 1760 and 1850, we're looking relatively neutral in the short term, basically chopping around sideways. But obviously when we eventually see a confirmed break either below this support or above this resistance, that is where we could see the next volatile move for the price of ETH. And in fact, if we break out above that level of resistance, this could potentially play out as a bullish flag pattern. And in that case, that would set up a price target at around 2.1k, just like this falling wedge pattern here on the 3-day time frame. But once again, at least for now, in the short term, we're looking relatively neutral, just chopping around sideways in between this support and this resistance. But believe it or not, you can make a lot of money very easily during choppy sideways price action just like this. And if you want to know how to do that, then check out the video in the bottom left of your screen right now, because that video right there shows you how you can easily profit from choppy sideways price action, and the video in the top left shows you how you can easily profit if the price is bullish or bearish using AI. But anyway, that's everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.